Hi there, this is Sanjan. Today we're talking about the cryptocurrency boom and fall in the market. Ever since the pandemic, Bitcoin has been on the rise. At the start, most business owners and many hedge funds believe that this is just temporary. On top of that, there isn't a new asset group added to the market in recent times. However, as the price of Bitcoin continued to climb, more investors started to feel Bitcoin may be here to stay. When more prominent business owners started to accept Bitcoin for payment, many investors decided to jump into the trade. Nowadays, most investors, whether big or small, knows a bit about Bitcoin. So in today's video, we'll be talking about the future of Bitcoin. Before we continue, please smash like button. And if you'd like to see more such videos, please subscribe to this channel. Firstly, let's talk about briefly what is Bitcoin. Bitcoin is a decentralized digital currency without a central bank or single administrator that can be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediates. Transactions are verified by network nodes through cryptography and recorded in a public distributed ledger called a blockchain. The big cryptocurrency was invented in 2008 by an unknown person or group of people using the name Satoshi Nakamoto. Bitcoin are created as a reward for the process known as mining. They can be exchanged for other currencies, products, and services, but the real-world value of the coin is extremely volatile. Research produced by the University of Cambridge estimated that in 2017, there were 2.9 to 5.8 million unique users using a cryptocurrency wallet, most of them using Bitcoin. Users choose to participate in the digital currency for several reasons. Ideology such as commitment to enclavism, decentralization, and libertarianism. Convenience, using the currency as an investment, and pseudonomy of transactions. Increased use have led to a desire among governments for regulations to tax, facilitate legal use in trade, and for other reasons, such as investigation for money laundering and price manipulation. Secondly, we're talking about China's crackdown on Bitcoin mining. China's renewed crackdown on the cryptocurrency industry has wiped off around $400 billion in value from total digital currency market when a major Bitcoin mining hub orders miners to shut down operation. Bitcoin was down more than 8%. It broke below 30,000 for the first time since January 27, according to CoinDesk data. Other currencies, including ETF and XRP, were also sharply lowered. Over the past few days, China has stepped up its efforts to rein in the country's cryptocurrency industry. Authorities in China's Sichuan province ordered cryptocurrency miners to shut down their operation, according to multiple media reports. Sichuan is one of the biggest Bitcoin mining centers in China. Many Bitcoin miners in the southwest Chinese province were closed according to state-backed data from the Global Times. The move in Sichuan comes after other mining-intensive provinces in China, including Inner Mongolia, also shut down crypto mining. In May, Beijing called for a crackdown on Bitcoin mining, highlighting how the order has trickled down from the top. China banned local currency exchange in 2017, forcing them to move offshore. That did not stop Chinese traders from buying and selling digital coins, though it added a layer of complexity to crypto trading. Chinese traders would have to move their Chinese yuan to a platform to buy crypto. This would be done via a payment service like Alipay or a bank account. So the PBOC, latest reminder to financial institutes, could be looking to stamp this out further. However, some analysts feel that it may soon become much easier and more profitable to mine Bitcoin Last month, Beijing called for measures to stamp up Bitcoin mining amidst concerns over its environmental impact. This has already resulted in crypto miners fleeing China for other regions, like North America. China's crackdown intensified over the weekend, with authorities in the high-power-rich China province of Sichuan ordered crypto mining to shut down operations. According to reports, more than 90% of China's Bitcoin mining capacity is estimated to be closed. It is thought that between 65 to 75% of all global Bitcoin mining takes place in China. The total hash rate or processing power of the Bitcoin network appears to have gone down sharply in the wake of Beijing crackdown. Crypto experts said that with more Bitcoin mining going offline due to China restrictions, other miners' share of the network will increase, potentially making mining much more lucrative. Quote, as more hash rates fall off the network, the difficulty will adjust downwards, and the hash rate that remains active on network will receive more for the proportional share of mining reward, end quote. Kevin Zhang, vice president of crypto mining firm Foundry, told CNBC. However, another big factor that determines profits to Bitcoin miners is the price of Bitcoin, which has plummeted from record highs in recent months on the back of negative comments from Tesla CEO Elon Musk and China's crackdown on the industry. Thirdly, we'll be talking about Cathie Wood's ARK Invest creation of a Bitcoin ETF. Cathie Wood's ARK Invest is creating a Bitcoin exchange-traded fund according to filing with the SEC. Wood is a long-time Bitcoin bull, has been buying up proxies for digital assets in names such as Coinbase and Grayscale Bitcoin Trust. Now the innovation investor is seeking to own the actual asset itself. The ETF investment objective is to track the performance of Bitcoin according to the SEC filing. The fund will trade under ticker symbol ARKB if approved by the SEC. ARK Invest is working in partnership with 21 Shares to launch the ETF. Bitcoin has hovered around 34,000 for the past couple of weeks as it struggled to reclaim its May high. Many in the trading community has kept a watchful eye to see if it will hold at 30,000 as it continues its decline. Some still say it could drop as low as 10,000 before rebounding. However, the digital asset has nearly been cut in half since its all-time high of 63,000 in April. China Bitcoin crackdown, Tesla CEO Elon Musk's decision to stop accepting Bitcoin for its EVs, and excessive risk-taking by crypto traders have all contributed to the recent price swing. ARK Invest acknowledged the volatility associated with the digital asset in the risk factor section of the filing. Quote, the market value of Bitcoin is not related to any specific company, government, or asset. The valuation of Bitcoin depends on future speculation for the value of the Bitcoin network, the number of Bitcoin transactions, and the overall usage of Bitcoin as an asset. This means that a significant amount of the value of Bitcoin is speculative, which could lead to increased volatility. Investors could experience significant gains, loss, and/or volatility in the trust holdings, depending on the valuation of Bitcoin, the S1 filing stated. Furthermore, there's a push in the SEC to approve a Bitcoin ETF. For years, the SEC, of which PS is a member, have denied application by the nation's exchange and financial firms to list securities that track the performance of popular digital currency, Bitcoin. Quote, that is probably the biggest, the most often asked question that I get. When will the SEC approve a Bitcoin exchange-traded product? End quote. Commissioner Pierce said in an interview with the CNBC. Quote, I thought that if we have applied our standard as we have applied them to other products, we will already have approved one or more of them. End quote, she said. Quote, with each passing day, the rationale that we have used in the past for not approving seems to grow weaker. End quote. The SEC applied a unique heightened standard to filing related to digital assets she wrote in 2020. And she has argued that the agency is asking exchange and would-be ETF sponsors for assurance beyond what it asks for traditional equity-based products. Now she added, the Bitcoin market looks more like an established market than has more participation from institutions and mainstream retail investors. With new call for an SEC-approved Bitcoin ETF come just weeks after regulators said it will again delay its decision on whether to approve an application by VanEck to list shares of the Bitcoin Trust on Chicago Board of Exchange. Regulators said in a letter dated June 16 that they will take additional time to seek comments from the public. Specifically, the SEC is asking investors and academics for their opinions on whether Bitcoin ETFs could be vulnerable to manipulation or whether Bitcoin itself is sufficiently dispersed and therefore resistant to similar underhand tampering. Denying Bitcoin ETF application not only runs the risk of a double standard, but also may leave thousands of investors with few more dangerous alternatives. Finally, we'll be talking about four of the biggest risks associated with Bitcoin. Bitcoin had a solid start to 2021, hitting an all-time high of 65,000 in April, but digital coin closed out the first half of the year down about 47% from its record, and several looming risks could result in further plans ahead. The first risk is regulations. In recent weeks, China has clamped down on its cryptocurrency industry, shutting energy incentive crypto mining operations and ordering major banks and payment firms like Alipay not to do business with crypto companies. Last week, the global crypto crackdown spread to UK, where regulators banned leading digital currency exchange Binance from undertaking regulated activities. US Treasury Secretary Janet Yellen and other officials have recently warned about the use of cryptocurrency for illicit transactions. Last year, former President Donald Trump administration proposed an anti-money laundering rule that would risk people who hold their crypto in the private digital wallet to undergo identity check if they make transactions of 3,000 or more. Here an interview of you. The second risk is persistent and extreme swings in the price of Bitcoin. Bitcoin valued to an all-time record of around $65,000 in April this year on the day of crypto exchange Coinbase blockbuster debut. It then tumbled as low as $29,000 in June, briefly sliding below $30,000 and turning negative for a year. It has since risen back above $34,000. Bitcoin bulls see it as a kind of digital gold, an asset uncorrelated to the wider market that could provide sizable returns in times of economic turbulence. But while volatility can be good when the price of an asset is going up, it goes both ways. Meanwhile, the trend of traders who have made highly leveraged bets on Bitcoin getting flushed out of the market has led to intense price fluctuation this year. While continued volatility could pull off some investors, Ross Milton, the chief financial officer of decentralized finance platform DeFi, said the volatility in itself isn't a barrier to institutions adopting. Volatility can be a significant draw as the potential for large price movement means that funds can make significant profit with a relatively small allocation compared to the size of your overall portfolio, he told CNBC. The third reason is environmental concerns. Questions surrounding Bitcoin impact on the environment could be another big headwind for the cryptocurrency. Bitcoin mining equipment requires lots of electricity to run, and Bitcoin energy consumption has risen considerably over the years in tandem with its price. While Bitcoin critics have long warned of its huge carbon footprint, Tesla CEO Elon Musk brought the issue back to the fore this year. Musk's electric car firm stunned both fans and skeptics of Bitcoin this year when he bought $1.5 billion worth of Bitcoin and began accepting it as a method of payment. But he subsequently wrote cryptocurrency after deciding to halt Bitcoin payment due to the currency's insane energy usage and a reliance on fossil fuel. The final reason is that rising speculation could create meme coins and scams. Dogecoin, a cryptocurrency that started as a joke, surged wildly earlier this year to record highs as growing number of retail investors piled into digital assets in search of outsized gains. At one point, Dogecoin was worth more than Ford and other major US firms, thanks in no part to support from celebrities like Musk. Its value has depreciated significantly since then. Elsewhere in the crypto market, decentralized funds, a token called Titan crashed to zero. Self-made billionaire investor Mark Cuban was a holder. Due to this reason, many countries does not allow the use of cryptocurrency. One such country is Mexico. Mexico's central bank issued a statement saying cryptocurrencies like Bitcoin are not legal tender and are prohibited from being used in the country's financial system. The comments came after Mexican billionaire Ricardo Salinas Pliego declared his stand over the weekend to make Banco Azteca the first lender in the country to do business in Bitcoin. Quote, the financial authorities reiterate their warnings on the risk inherent in the use of so-called virtual assets as a means of exchange, as a store of value, or another form of investment. End quote. The statement said, according to Reuters, quote, the country's financial institutions are not authorized to carry out and offer to the public operations with virtual assets such as Bitcoin, Ether, and XRP. In conclusion to speculation of Bitcoin, some investors are afraid to jump on the cryptocurrency bandwagon, as there are a lot of risks associated with holding the assets. More investors do not like to participate in this trade. That goes the same as me as well. When looking at the chart, it's very hard to look for a strategy that has a low downside while having a huge upside. Hence, I will not be participating in the cryptocurrency for now. With that, thank you, have a nice day, goodbye.